Welcome back. Market Mastery, the 1 hour you need to make sense of the market so that you can make some money in it. I am back. I am one of your hostesses with the mostesses, and joined by Mike
Porterhouse.
IL.
What's going on, guys?
IL.
Yeah.
Did you ever go by? What did you go by when you're Mike or Michael?
It was Mike. Mike growing up, and then fifth grade. Well, Porter came out. Yeah. Well, Porterhouse actually is fifth grade. Yeah.
Good stuff. Good stuff.
State.
So we're in it. We're here. Had some troubling news today. Greenland is in sight. Everybody's fighting. You want to talk a little about that tariff stuff because you're explaining it to me, which means you know a little bit more about it. But I think that's a good way to start, is what's kind of state of the union with the tariffs, state of the market, and then we'll look at where it's likely to go as a result of this.
Oh, yeah. Just, again, like Trump's pressure tactics are going to be tariffs, right? So he wants Greenland, and he's pressuring tariffs on, I think it was 9 EU countries and the United Kingdom if they did not back America. So, yeah, we saw the market drop 10 points at openness today. So, like this morning, SPY Playmaker, we had to adjust some of those levels for the gap. But, I mean, kind of recovered a little bit here. But, that's what we're kind of seeing. Like when the tariffs come out, the whole market kind of panics. And then we see a recovery, especially when they're either delayed or, trade deals come out, and then you see it blast back to a V-shaped recovery. So I'm not too concerned about it right now.
All right. Let me get this posted on Twitter.
Let's see if this week for economic stuff. So Thursday we got jobless claims, GDP, and core PCE. So one is and then next week, January 28th, Wednesday, we have the next interest rate decision. Which let me look up now, see what the CME groups we're looking at for percentages. Okay. Data. There we go. Okay. So 95% chance right now they have it as no change.
No change to what?
The interest rate next week.
That they're saying that there will be the estimate is no change, but yet here we are.
But about a month ago we were at 77% for no change. Now we're at 95%. Yeah, but I mean, with all the issues with the pressure that Trump's putting on Powell and the Federal Reserve, like, oh man, I'm prepared for volatility. I think that's what we all need to be, at least short term.
All right, let's look at it. Got that tweet out. Sorry, I was preoccupied to do that. So welcome back, everybody that's here. Feel free to comment about your opinion on the situation and what do you think that is going to happen with all this Greenland business? Because I think right now that's the real up in the air. We're looking at the simple ones, oil, obviously as a result of Venezuela. What I think is interesting is that the United States is like, they're just trying to flex max power, but I will say, doing it business class, it's an evolution from what was. I do believe that if we can conduct ourselves without the violence, that's a beautiful thing. Not to say there was none, right? But I will say that this has been a fascinating thing to watch from afar. Being in the United States, obviously I'm down because part and parcel beneficiary of this, whether I chose it or not. And you do want to be on the side that's safe and has the power. So I guess there's that. But from a macro perspective, I think it's fascinating that they're kind of just saying, look, we're going to come in and we're going to do what we're going to do, and we're going to do it the best we can without violence, and we're going to try to do it in a pro-business way. And let's hope that's how this actually shakes out, right? Like, when you really look at it, when people start making unilateral sweeping decisions like this, doesn't tend to work well. It hasn't in history. Unless it's actually driven by an underpinning good for humanity. So I think if we don't find some sort of mutually beneficial ground to stand on, this whole thing's going to end in even more disaster than we're already in. But for those that don't know, we don't have time to go through today, but what you're watching at large is our entire system, humanity, is now in a position where no one can pay what the United States has accrued. And so the rest of the world is holding this debt, thinking there's some value in it, right? But I hate to say it, but I think maybe it started as like, yeah, we'll pay it back. We'll pay it back. We can pay it back. And it was reasonable in the beginning. So I don't assume there is no cabal that's sitting there going, kill them all. Like, I don't believe that personally. I do think there is a greedy group of individuals that don't think about how it affects other people. They just think about the bottom line for sure. But I don't think it's intended on. It could be all I know, but nevertheless, I digress. What you're seeing is a kind of second prong to that large scale move, right? It is it's some of the most impressive financial fuckery I've ever seen. I don't know if you could really call it anything other than that, but they're basically offloading this debt to the rest of the world, and they're going to slowly price it down and devalue it until it's not worth anything. So technically speaking, we won't owe anyone because the debt's erased, right? Again, technically speaking. That doesn't mean that somebody's not left holding the bag, right? So that will happen. We will move to a weird basket of digital currencies in which the government retains far too much control, and that is where we're headed. So if we can't find a way to store value in a mechanism that isn't fully dependent upon the government to administer, now's the time for ideas, guys. But what you're seeing, I think, in the market is kind of the offshoot of that exploration period of what the hell is happening here and what are we going to do at large, right? No one wants to take on more debt from the United States because they're already showing that we can't pay what debt we do have. So then when you take it a step deeper, it's like, okay, what do we really do from here to move forward? And I think a lot of people are operating from a place of fear, and they probably should be. I mean, looking at this right now, just like let's focus on the SPY and just macro conditions. We need to see 600. That's the healthy expression. That would be a great stepping stone to another move up. Now, are we going to see it? That's the question. I'm not quite sure. You can see that demand was strong here. When it came down and tested 652, it just got pushed right back up. What's up, private money guy? I'm not sure who you are, but welcome. Hello. Assuming you know us. Your Discord name is probably just different than your username on here. That's a great question from Doug. What's up, Doug? I haven't seen you in a while, Doug. How you living? Oh, there's Davey Day. He asked, how is acquiring Greenland affecting the market so much? The tariff decision from Congress has been delayed 3 times now. When will things that Trump say be ignored in the market? Never. The guy's the president. You can't ignore it. That's the problem as much as it is kind of the benefit that's been driving progress forward is, he's such a wild card. You never know what he's going to do, but it creates action. And that's what is important. As a people, we need to all be thinking of how can we better improve the lives of collective we, not me. I think that's the problem in America is like everyone's scared into that position of me, not realizing that when you're stuck in that position, you are guaranteed to be subservient to a master. And that master is fear, and fear is very predictable, which once again, back to our example, predictability equals profit for private equity. So if you're predictable, you are a mechanism of profit for them. Not for you, not for your benefit, but for theirs. And if that's okay with you, that's okay with you. Keep it moving. But for some of us, that's not. I want options that are not going to destroy my health to eat, that are good. I don't want to have to tell my kids no 1,000 times at the supermarket because all the food is garbage. I don't want to have to be in that position. So I think hopefully what you see is the good ones emerge. So the more forward-thinking businesses can evolve out of our own mistakes here and make better decisions moving forward to create more sustainable business practices that will allow for more growth in the market and honestly invite in just be more collaborative and participatory. But again, everyone operates on the base of fear. It's unlikely that happens, and then we get back to the same problem we've been talking about for the last 500 years, 1,000 years. You know, religions have killed over, nations have killed over. Big old waste of time. Big old waste of time. Because all the while you're preoccupied. What are they doing? Cha-ching, just running the money printer while you buy your Chipotle and you rent your you get your Netflix subscription, right? And you get your gym member. Like they have it to science. There's nothing wrong with those things. Just know that when you participate in those businesses, you are participating in the stock market, just not as a beneficiary, right? So for anyone that's like, oh, well, I just don't even know how to get them. You are involved already. You're just giving the money to someone else and not getting anything back. What I'm suggesting is you come from this side of the table where you are participating in a very simple way, except in exchange, you're getting the equity and the security for your future. So I think that for anyone that's new, it's not complicated. It's not, don't be scared of it. There's nothing to be scared of. You don't have to do anything. Right now, you're losing. This will at least get to where you don't have to lose anymore. And then you can start winning, which is producing your own income. So looking at the market for what it is, we are going to see some significant volatility. Again, I'm pegged to that 550, 560. That just seems to me the most logical level to retrace to. And in the event that markets are going to decide to be flat, we're going to see 475 and just sit there. And so, you know, has anyone ever seen that? What's that one thing that came out like hundreds of years ago or something? And it literally shows each year, and it shows like on the graph if it goes to the highs or the lows.
Oh yeah, yeah.
And supposedly 2026, the highs are a midline high, which means not new high as far as value is concerned. It's a retracement before. It's basically the top of the dead.
Yeah.
The 2026 is the top of the dead cat bounce, which
Man,
it is possible. But where I always get stuck is no one could have anticipated technology in the way that it has evolved. So it makes me wonder if those same paradigms are still true. So Doug also mentioned another thing I've been noticing lately: when stocks and ETFs go to all-time high, there seems to be some bad news that causes these pullbacks. Interesting timing, right? So again, just know that they know when to buy the rumor and sell the news all day, every day. So that's what, again, we talked about people that are operating from a place of fear. They're the downstream market for that. They're the people buying those things at the top because they're just so barely. Because look, you have your money managed by some guy sitting in an office that doesn't care about you somewhere, who's incentivized by the system to buy the products that pay him the most. Not make you the most, pay him the most. And he will find a way to justify that every day when a decision is made that doesn't truly benefit your interests. Find where the incentives are, and you'll see where everybody stands. If you can find the incentives, you know exactly where everybody's coming from. So, what are the incentives of this market? Right? Look at where it's at relative to the last 10 years. We are more than double, triple almost. Now, you could also argue that we've at least tripled our output as a people vis-a-vis technology. So that's the kind of argument that there's still underpriced action here. However, you never know. But the structure is starting to look, it's starting to look to me, it's just breaking down. It's not driven by demand anymore. It's upside driven by fear, in my opinion. Like you have to keep buying because that's what you have to do, even though it's not the most sensible thing. So you don't do it full scale. So there isn't explosive demand. You're just not going to see it. And right now, the characteristics of this are just telling me that we're going to come down, and we're going to find trading between 550 and 600 probably for a while. That's what make the most sense. You can see it here. Here, these are more volatile. But I think this is the more likely expression, right? Found the highs, 22. New low, 22, same year. So $100 difference. We're talking about what? Almost a $100 difference. Right? So we can assume that if the downside occurs, it should look a lot like what we saw right here.
That would fit the
Because
trend line
all
too.
the other characteristics are lining up.
Even if it's
Yeah, I
still
didn't even do
expansion,
that. I was just saying, just really just
yeah.
evaluating shapes. It tells us that we're going to see that level. So let me stop right there. Would you say right now that you understand that the SPY is breaking down? And do you also understand that right now the situation looks bearish? Are we in agreement on those facts? I'm not saying it is bearish. I'm saying it looks bearish. It appears as if it's going to continue to be bearish.
I'm a little bit mixed still. I mean, if you look at the monthly, you do have increasing volume and a ton of those green candles too, straight up. And then going down to the weekly, you see there are some weeks of higher than average volume during those months where it I feel like this is a point where it's indecision. Like under 650 is where I would probably be turned bearish short term. And I do like the targets down to even 550. 600, 550, and then he says 475. Yeah, I could definitely see that. And if, even just sticking with the trend, that would make sense too. I think it would be catalyst driven though, for sure. I think as we have plenty of catalysts. I mean, it's a lot of talk too, but we've never actually had one big major catalyst that's actually taken something real that's taken the market out. The expansion can be crazy. The higher you go, the further you head back to, find that retracement. How would you be feeling about doing some longer dated options? Even if the hedge.
Yeah, I don't mind. Oh, there it is. Huh. Hold on 1 second.
It's like a barcode.
Uh-huh. Oh my God. I gotta do a different one. This is crazy. Okay. Yep. That's beautiful. Just trying to find the shape here. Where can we find the most touch points? Okay, that's a yeah, close. All right, so here's the test. And you did get a little bit of a break. That's interesting, but basically this has been traded as a buy the top every time. So if you're looking at this chart, I would say that downside is imminent. The sellers have been trying 1, 2, 3, 4, 5 times, produced a gap down. We just haven't seen any fall through on these moves. So that's a great setup. So tomorrow, basically, we know, based on which way it goes, exactly how to trade it. So let's put that code up. If you're not getting these SPY Playmaker trades sent directly to you, the exact options contracts we're trading to the upside and the downside, scan that code or just type join in the comments. We'll send you the info. You need to get in there. We're going to send you the exact options trade that I'm going to trade. Look at this volatility. It is going to pay if it sells off in a ridiculous fashion. Do not miss this. This is going to be a large trade opportunity. Again, opportunity. So if the market doesn't go that direction, we keep it moving. We take the upside we get, the downside we get, and we just keep it moving. But this is one of the few that we'll get every year where we're at a very critical pivot wherein what happens from that point is going to be explosive, upside or downside, right? So what I'm telling you is this is a rare opportunity in time for the S&P based on where it is, where we typically see some pretty significant volatility. And I'm telling you, I'm going to maximize my gain from that volatility by sending you guys exactly what I'm trading. So scan that code or just type join in the chat and we'll send you the info. But I'm loving this first for a breakdown and seeing, how we test 658. And then to take it a step further and shoot for the big time on the longer dated stuff, which is very possible. So yeah, I don't know if it's a leap per se, but I do think there's definitely a longer term trade idea to also explore with this. So basically get in while it's hot because the SPY move is going to be big. And I can't wait to capitalize on it. If you're not, then you are getting your lunch is the lunch getting eaten. Hate to say it. Will there be an updated option play this morning? Which one are you referring to specifically? Was it Lee's or
SPY Playmaker went out this morning, but this could be one put into the next week's.
Yeah, this would be for the next one, but I'm pretty sure we had this range lined out, did we not? Below 688, give or take.
Yeah, 688. Yeah, 688 was definitely a level on there.
682 is a pretty key level.
Let's see. The 4 hour here. Yeah,
so basically, we're going to watch for a few key things here that will set us up for success. One being a retest of this area. We're going to trade that and make a killing. Then when it fails, we're going to trade the downside. We're going to make a killing. And then here's the beauty. We're going to hold enough of it that if it continues to pay, we will make insane money. These are your kind of 10-bagger options, the ones that you guys always see, and you're always like, hey, how do I do that? This is how. This is one of those. This is me telling you, this is how you do it. Sign up and you'll get it direct to your inbox or your Discord, whatever's clever. But I think that the trade that's going to materialize out of this is going to pay big time, just like the last 5 have. So looking at this on the whole, you want to get in today because today is going to really line up the volatility for tomorrow, and you need to be prepared. So again, if you can't scan that code, just type join in the chat. We'll send you the info. Delete this from the chart. Beautiful. So we have covered the SPY. We're going to post those options trades straight up direct to the audience. If you're on that list, make sure you're on it.
Put that link in the chat too.
Yeah.
The link is also in the description too, if you want to click on that. Let me try to find where I put it.
Okay. All right, so moving on to one of our other long-term trades that is selling off and following the market, Tesla. I felt this one needed an update for sure. So ignoring that we predicted this perfectly, right? I don't know if we have a screenshot of that, but nailed it. Just happened a bit sooner than we had expected. So either way, fantastic. Currently lost our 429 level. If this doesn't hold 406, I'm done. I'm out. I'm selling a large chunk of the position. specifically focused on this critical point right here that cannot be lost. So basically what we want to see is two things. A, Tesla gets bought back up, and B, it gets absolutely demolished at this level, goes straight up. We want to see demand overwhelm and explode. We do not want to see this just continue as like a sideways will they, won't they trade. So that's your exact cutoff that I'm following for Tesla. Same for NVIDIA. We have 175 and a half. Direct point of confluence here. It should be coming mid-September. So again, number of months away. But this is my target that by September, this should be trading at about 175. It's currently at 178. So it doesn't feel bad to hold it, right? Because you know more than likely it's going to be near that price at the time. I am not buying more. I will say that below 174.90, I will sell some and then reposition to look at 150 as an entry point. So I am going to make sure that I'm not getting sucked into these names because they're going to be extremely volatile. So if you don't have an unbelievable average on Palantir, NVIDIA, Tesla, etc., join now. You forget about the money you would have made. You need to get access so you can be first. Because again, we're holding Tesla from sub $100, right? We're holding NVIDIA from sub $15. We're holding Robinhood sub $8, right? All these names that are up at 50, 60, they're 10 baggers. You just need to know the right trade. That's all that's missing. It's not that you can't do it. It's just you're looking at the wrong name. So again, NVIDIA is just hold on my watch. It's simply we're watching that core level. I'm not doing anything until it interacts and gives me more information. And another one to call to is Meta actually right now, because this might, again, if the general market holds up, this is an interesting place to buy Meta. This is an interesting place to build it. So I don't own any. I've missed the boat. I don't know why. The one time I owned it, I accidentally sold it. I didn't mean to. It just happened. I had an auto sell order and I didn't think would fill, and it got filled. So it sucked when on this run up. So I'm holding no shares, and I would like to be. So this is an interesting opportunity to buy. However, keep in mind, creates a lot of risk that following the same trend from December, this starts selling off from here, right? It's no good. It's no good. So for me, as far as looking at a way to incorporate this in the portfolio, and I want to add some Meta, I want exposure there, I'm just watching this level right here to see if it can pull off very similar to what it did back in March of 2025, which is create a little market to come in and support them and build this base so they can make another effort at the run up. All right, so that was the 5 names. Ring is the last one. So these are the pretty much the 5 names that I just wanted to cover because they're ones I cover routinely on the stream, and I know everyone's updates. This one being at bare bottom right now, 25 and a quarter, give or take. You can see it's barely struggling with this line. If we can't hold 21, I'm out. I will buy this down to 21. I am willing to hold this long term. It's institutional. I think their data is worth a lot more than what's being recognized right now. And I do believe that they're easily an acquisition target for future megalists like Amazon that are going to need to buy data sets, refined or unrefined. So whoever has the data is king. So this is, I think, a really interesting and it's a genius idea. So again, anything that's above the fold in terms of like a genius idea means that it is a position that will be attacked. Because nobody likes getting beat. And when you start beating the big dogs, they come a-calling. So for names like this, just know they can get beaten to shit on volatility because they have such strong institutional base. Those are their best friends. So they can literally forcibly drive the stock down, then call their buddies, and they'll buy the stock back up. Why? Because they wanted you to hit your stop loss so they could buy your shares for $21 and not $25, even though it's only 10 shares, right? So keep that in mind.
Here, I got one that we've
All
been
right.
over before. I think we should cover
That's pretty much all I have.
Stringer. I think it's SDGR.
Oh yeah.
That one's at the bottom, but see it going either way here.
Yeah, this one looks tough right now. It's hard to tell what it's driving down naturally because the market doesn't believe in this, or is it something they're doing wrong? Right? Are they shitting the bed? Are they not reporting things properly? Like, or is this just macros driving it down? What do you think?
I'm zooming in a little bit here. I mean, today the macro was bad, but you see, that's the thing. On the 4-hour, you can see the volume starting to increase to the downside, which is a little bit scary. But that is a bottom too. So back on the 21st of November, around like $16. I mean, as long as it doesn't break there, I'd like to play it from maybe a little bit lower from here and watch the breakout over 650 with some volume to the upside. I mean, if you look on the daily too, we did have a lot more volume, well, a little bit more volume than recently. We did hold up on pretty much a doji. So the other soap, I think just watch it the rest of the week, see what happens there. I am holding a few shares from like 17 area. Yeah, but it's only like maybe 10%, or well, 10% of what I planned to put into this position. Yeah, but for me, definitely hold over 16. And then from here, I want to buy into momentum over 650, 1650. But even if you're targeting up to that $20, it's still what, 25%? That's a crazy return. You know, if you're playing the retracements for like runners after that, that's well over 100%. So this is massive upside for a little bit of risk from this level.
100%. All right. So I would say all in all, guys, we're just really judiciously. Oh yeah, I mean, this is the ultimate place for entry. So I would say looking at this for what it is, I would say we want to treat this as a double bottom that we want confirmed. So basically we want to see it touch down and something you could do on your own. Watch the chart, 1581, or you go follow the Penny Boys account. Here's the name, just how it's spelled, Penny Boys with an I. You can follow our account. We publish these charts, so that way you can watch it and feel most confident that you're looking at it properly, because we can publish this chart with the levels on it so that you can continue to follow along, which we should definitely do. So we want to find this double bottom point here. I'm kind of calling that, give or take 1581. We want it to get retested and we want it to be respected right here. And once we have that, we're in a great position to then, I will, for example, if I wanted to own just hypothetically 100 shares of this, right? This is a time in which I would buy price 65, 70% of those shares. Just because we're so close to the level, we're testing. Now, I'm not saying that makes the most sense for everyone. It makes sense for me when I'm in high conviction mode, right? However, it is paramount that you have comfort first before you explore these trade ideas. Because if you go into it not from comfortability, not from security, not from confidence, you will second guess yourself into a number of losses,
fear,
and a bunch of fees. Again, that you're paying the institutions because they know you're going to not make a decision. They know you're going to be conflicted. They know you're human. The best part of you being human, they know that, and they found a way to exploit that. What we're showing you is how to not get exploited, but still use these tools and techniques for your own benefit. So in this example of this trade, this is a bottom feeder trade. I love it. Why? Because it either holds at this bottom, which we're very close to, or it doesn't, and it's over, and our money is free to run around. So, for example, if I were to enter this 100 shares, that was my goal, was to own 100 shares of this. I'd probably buy 80% of them now because we're that close to the bottom, and then set my stop loss, maybe 15 in a 1510, give or take 1501, just to kind of keep a little bit of distance and protection, and then I'll just wait. And hopefully, here's what happens most of the time on your trades: it'll get close, not stop out. At least just get back to here. That's insane. So
Yeah, it's 100%.
I think this is a great position trade where we can get in right here, take a large portion of the position, put in a tight stop where losses are minimized. And yes, the upside is ridiculous. At least $10 a share on the upside minimum I'm shooting for. I would say more so I would be targeting 40, 42 as a full retracement, meaning we have, 2 to 3x from here, pretty much. So yes, whenever I take a trade, I do publicize that within the group in the private channel that shows everything about it, which I'll post in the trade idea. It should be in there.
Up to who would that be? 16. Shut up.
Okay, I'm gonna go SDGR.
It's 26. Around 26. 60.
Yeah, I posted it in my channel. Post a link here. You can get in, see it. We also crushed EVTV. We called that out at $139, $39. Look at this thing, dude. Bang. Where is it now? 368.
Jeez, still up there.
So here's where we here's where we bought.
Like $1, $1.50, right? Or $1.35, I think you got. Yep.
So again, here was the bottom. At the time, 115. We were buying 128, give or take. And sure enough, it snapped back up and then exploded. So these trades are free money. If you're not getting these, you should. You just have to join the Discord for these. Mm-hmm. Okay.
Charlie, what do you mean by
the CGR thing? And then, if you guys probably the time frame for the trade.
Oh, for the trade, right on the chart.
I'm looking right now to see if it's in the trade idea in Discord. I do believe it is in there. By 2030. So I'm expecting at least 230% upside by 2030. So call it 4 years. That's where I'm shooting. So if those targets make sense to you, that's why I love this. And Porter's exactly right that it is a no-brainer entry because you're so close to that bottom already that if it violates it and breaks and hits the stop loss, it's a nothing burger.
Just got to keep a mind
so
out for what earnings is. But it doesn't look like earnings is until March 4th.
Okay.
January 9th.
January 12th, they posted some sort of update.
Yes, I see.
Some sort
Eli
of
Lilly's
press.
AI drug platform is going to be on their software as well. But that was the 9th. I think it was around when we were talking. No, that was before that. or after we talked about it. Yeah.
And guys, feel free to start coming up with your names for Smash or Pass.
Smash pass.
You can feel free to post those now. Just post one ticker per comment. That's all I ask. Post as many as you want. Just one per comment. That's all I ask, so that we can just pull it up on the screen.
Yeah, and if you had ones from before in the chat, just type them again for us. I saw a few. Like IBRX. I think, what was it? It's cool. If you're still here, was it you that was talking about IREN? IREN? That chart's looking hot. I got that one pulled up here too. Yeah. Like those fib extensions are just, oof. Wow. Yeah. Oh, there's one I wanted to talk about too. Let's see if I can find it.
Okay. I was running again, updating based on this press. What the hell happened to Trading View?
Here, I'm gonna type something in the chat.
Did you switch the screen?
No.
What the
I don't
hell?
think so. It looks the same for me.
How am I showing this? What happened to Trading View?
That is Trading View. You're still in the Trading View app, but it's just showing the. I don't know. I do not like the UI of Trading View.
I can't. I don't
see it
because of the news.
Yeah.
No, I'm saying it's like hidden on my screen because of the news. I don't see it. Where the hell? Hold on. Like it's not in the icons at the bottom either. It's like it's not even open on my computer. That's why it's weird.
Oh, maybe it's that one of the top right, the one all the way from the right, or furthest to the left. What looks like the screen. Maybe that will do it. I don't know. Whenever this happens to me, it takes me forever just randomly clicking buttons.
No, I can't open Trading View. I'm saying, hold on.
Here, let me try to do the same. See if I can.
I'm saying like the Trading View window is not visible.
You can't even see it.
No, yeah, so I can't like change it, or it says it's not even open, which is weird.
Oh crap! What did I do here?
All right.
Great.
What?
No, I honestly, I struggle. I feel like a boomer with this. Like with Trading View, when I get off the chart onto one of the other things that they have on the platform, like I don't know how to get back to the chart. It's bad. It's really bad. Well, hey, we're here, guys. Yeah. All right, we got how many tickers? We got 1, 2, 3.
I'm just going to have to pull it up on Weeble, I guess. That sucks. Okay. All right, let's pull up the first one then. Here's one up there. IBRX. Oh boy, hell yeah. Look at that. That one's going boom,
Oh my
boom.
gosh.
Good stuff. Good catch. You got this one. It didn't violate the prior high. So it says as long as this stays above the lows at like 6, as long as it stays above 616, give or take, this could definitely go to 1050. But it looks right now like it's about to sell off. Personally, it looks like they're about to get a nice fat exit tomorrow. So I'd be very careful with this one until it comes back down to like 560, maybe even 431 is like the ultimate buy if it's continuing the trend. If it's not continuing the trend, it'll break below 434. So I'd watch that one. FLR. Flower Corp? What the hell is this? Fleur Corp? What do they do? Wow, long history. $40 is a nice base. Let's look at what the hell these guys do.
Holding company, engineering, procurement, construction, fabrication, and modularization for energy solutions. Oh wow, this seems like a black box to me.
Energy is all that's left, in my
Emissions
opinion.
solutions.
It's kind of what's
Department of
left.
Defense, of course, intelligence agencies. Yeah, it's definitely a black box.
Yeah, I'm liking this at 42 because that's an easy cutoff. It was down to $2.85. My God. Crazy.
What level do you say?
It's above 40 pretty much. That's the defining line there. I guess 32.41. That's the pivot of that distribution upward. So above that looks good. It's just the downside's quite big for what upside, maybe double, but you got to take pretty significant downside to get there. I don't know enough about this, but it does look interesting. Like there's something shisty going on that could be worth exploring. I don't know exactly what, but
Yeah, the part that's like high-end technical solutions to the United States and other governments, Department of Defense, FEMA, and intelligence agencies. Provide services to commercial nuclear clients as well. This is really interesting. Yeah. Write this down.
The only thing is this does smell like a little. This is where the balance sheet fuckery gets weird. Like if your company's revenues don't justify your existence, that scares me because that means that you're printing out lottery tickets that you're sharing with your friends in the hopes that it hits. Does everyone understand the difference between those two? Like when companies start splitting up their equity as if it's worth something to buy more of another company that might be worth something. Do you see how you took a maybe of a maybe and then wrapped it in another bigger maybe? So the risk just every time you add unknown things, risk grows the fastest. So when you're trying to put together a trade, if you have two variables that could destroy you, that they will compound much more quickly than the growth-oriented variables that are not risk, but upside. So like, for instance, let's say this company's working in AI and we estimate the AI market's going to grow by blah, 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 which we then know they'll take a percentage of it. We can project their growth. My point is, even in a best case scenario, most of the time when you can project their growth, the downside is 3-to-1, 2-to-1 to the upside, because most people don't know when to sell. So you have to assume that you're not going to sell. You're just going to hold it and suffer, which is what most investors do that are kind of hit the intermediate threshold and don't ever go to advanced. That's what they do. They hold and hope. They were smart enough to buy the right names, but they didn't have the strategy to leave them when the party was over, right? So like, it's almost like you gain an advantage that becomes a huge liability eventually because you don't have the other piece of the journey. So when these companies start piling together a bunch of what ifs to buy other what ifs that are based on other what ifs, they're basically saying, hey, we've kind of hit our ceiling here, but a bunch of crazy shit could happen. Like, that's 0.00001% chance of happening. That's the future they're selling you right now. You're paying for the maybe happening ahead of time, even if the maybe doesn't happen. And they're paying nothing or very little. So keep that in mind. If this company is predicated upon them giving some of their company that's basically not been able to grow from an actual value creation perspective, and maybe that's the difference. Maybe that's what's made me good at this, is my mind only goes to value creation additive, generative. If it's not generative, I don't want to do it. If it's not generative, I don't really like it. If it's not sustainable, it doesn't impress me. If I can't see the future, I don't see shit. So like, when I look at these, I don't see future. I see a way to offload a bunch of technical financial balance sheet bullshit that I don't understand. Honestly, I don't get it. I'm in this business pretty deeply, and that shit's over my head. So odds are it's over your head too. So basically, what they're going to do is pile up those maybes, sell it to us now, hoping that we'll buy it, and it might pay off. But the point is, we are taking all the risk. But the upside isn't balanced enough for us. They're keeping the upside, offloading the risk. We're taking the risk for a maybe of the upside. So if that makes sense to you, type a 1 in the chat right now. If it does not make sense to you, type a 0 in the chat. So basically, you're typing 1 or yes if you understand that this company is going to take a bunch of fugazi, what ifs, cool stuff, woulda, shoulda, coulda, woulda, and they're going to basically take their company, take those what if units to buy more what if units of this other company. Now both companies go up in value. What's changed? Has the risk decreased? No, you took on more risk. Has the market changed where there's now more upside? No, we actually understand that we actually know the upside more now, which means future potential goes down. It's a good sign because that means it's a real thing, but future potential diminishes. So basically, you've got a company that's looking in the right direction that wants your money so they can go that direction, versus companies that are already doing it and own it and buying that equity. That's the ultimate question, Charlie. It's the ultimate question. It's a matter of all the things we do in Penny Boys, right? It's all the things we taught at Tariffs Paradise, along with just a running, consistent understanding of what is the current narrative, pretty much. Let's just take all the things I know you already know and just matching them against what is the narrative, and do they fit? Are they aligned? Are they aligned? And I would say right now, I have no interest in being distracted by companies like that. Schrodinger, yes, very different. They will be the pipeline, right? They're just going to try to be the front end for all drug discovery. It's fantastic. There'll be a platform that all drug makers use. Great, scalable as hell. No, like too big to buy, right? We're buying something with realized, recognizable, straightforward value. Again, it could go to zero for sure. It could go to zero, but the odds of it going to zero, in my opinion, now are far lower than it going higher. So basically, where it's trading now, we're taking very little risk for a whole bunch of upside with a company that's already doing the AI stuff, that's already got the clients, that's already expanding their internal database. They're only getting more valuable, right? More data, more value. So all we're after is value. Value that is not recognized yet by the market, which if you can recognize it first, you get a free run up. Let's say this is lagging the market by 10%. We get in now when everyone else is scared shitless. When it corrects to regular value, it's a free 10% cushion. I've always been willing to take more risk, but only because the reward and incentives are structured for my benefit. Again, the incentives are aligned here for me to buy more of this name because this name isn't going to offload a bunch of what ifs to the shareholders and maybe do something. They're already doing it. They already have the clients and they own the data pipeline. So in exchange for my dollars that I give them, I get my pieces of paper saying I own that percentage of that data pipeline, which is the shit I want to own because it's going to be the most expensive stuff. It's going to be the only thing anyone wants to buy. Data, data, data. So find the smarter front ends that people aren't looking to that will have all the data, that aren't data-focused companies telling everyone we're going to have all the data. If you got to tell everybody you're going to have all the data, you're probably full of shit. I've always subscribed to that. The best of the best don't sell anything at all. You come to them and say, I'd like to join you. I look for companies that have that, where by my participating, I'm leveling up because what they're doing is truly great. Now, Charlie asked the question of like, well, how? Applying the basics. All the stuff Charlie, all the fundamentally driven stuff, like, is there revenue? Just Googling, basic Googling, is the business look real? Okay, great. It's a good start. Now we can take it a step further. Is it filed? Okay, great. It's a publicly traded instrument, so we know it's at least that real, right? So now we know, okay, it's all real. We can trust that it's a real thing and really happening. Now, can we find a way to understand the story? Because I think that's a critical component. You need to understand what they're really trying to do. Or it's going to be very difficult to hold a great company during a tough time, which means you sell a great company at the worst time to sell it and then watch everyone else make money. That kind of shit fucks you up for life. If you rack up enough of those where you sold at the wrong time and then tried to buy back in and lost, you'll just quit. You will quit. It doesn't matter how much proof I show you, you will just quit. You'll bury yourself. Do not bury yourself. So finding great names like this is not that hard, but trusting the process and holding great names is difficult. We do all the work to find them for you. We have a team scouting 24/7. We're all doing this all the time, finding the best opportunities where we can place our own money and then sharing them openly. No gatekeeping, right? So if you're in the group, you're in the group. If you're not, you're not. We spend a lot of time, effort, and energy doing this. It costs a little bit of money. It's worth a lot of bit of money. So come get access to the research to make an informed decision. Then the beauty of it is you have a community to be there in your moments of weakness and desperation. And they happen. They'll always happen. I do it still. Where I want to dump a name that's not performing well because it's scaring me because, I'm thinking of something with my kids or future college, or maybe my job is I didn't get a bonus I was looking for. All that shit will come into your mind and it will tell you, you're an idiot. You're going to fuck it up. You have to sell. Just sell now. Just sell now. Because taking risk has been burned into your head as a bad idea. Just taking risk generally is a bad idea. Taking the right kind of risks, that's the key. Taking risks is a part of the, without risk, there is no reward, right? So it's one system. So how do I find the right risk reward system for me? That's what we break down with the 1 to 3. Our trades are risk $1 to make 3. That's my bare minimum in business and trading, anywhere else. If it doesn't produce that kind of upside, then it's probably not worth my time in the current state I'm in. So that could mean, a trade isn't worth looking at. Stock's not worth buying for me at this time, even though the trade setup's there based on what's going on in my life. This is all about you and making the right decisions so that you can benefit. We're showing you, here's the best names that offer the best opportunity based on this set of factors that you can look up yourself and confirm. You then need to make the decision of, this is a trade I want to execute, and then just set the trade up. All right, I'm going to do a quick blast here. RNXT, one of my favorites, dude. Their CEO is a wonderful guy that's doing incredible work. This will never be a 100Xer because of what they're doing, but this is one that will, with data, absolutely create an opportunity, I think, for 3 to 5, maybe 10X. As you can see, it's like upside maybe $5 to $6. Again, on data, you can see that this thing gets bought up at $1 all day, every day. They recently closed an institutional round that was oversubscribed with 5 of the biggest firms that buy biotech, and they completely filled the round. So when you get that institutional buy-in and support, you typically see quite a whiplash in the market to the upside, because now small cap investors that were right about a good name that was undervalued get validated by the institutions, which bring in all the FOMO people. So I think RNXT is due for a bit of FOMO. I really do. So again, that's a long-term partnership we've had with them for years now, where we get proprietary access to information that normally isn't going to be public, right? And then that way we can validate that this is a good opportunity. And at which point then, can't share any of it, but we can then know that this is the right opportunity to explore. So then we can publish public research, right? So again, this pipeline's been great. This guy's been great. I love everything they're doing. Again, I have a hard stop on this no matter what, because $1 has always been defended. If institutions stop buying at $1, it changes the whole thesis, right? So as long as this continues as we're going now, I love it, and I love a 3 to 5X on the upside, and analyst targets would align with that. If that ends, the journey ends, and thus no more upside. So again, just set your stop losses on these. Like, all you have to do is set them. You don't have to look at it ever again. Just make sure you're appropriately managing your risk, however you may define that for yourself as an individual. Let's see. SLV, a little silver. That's been interesting. Oh my God. I did not realize silver's been a...
That's like a meme coin, man. Look at that. Wow. Wow.
All right, so I'd wait for 71, and then I'm a buyer shooting for 100 for sure. Because remember what I said, they're offloading the currency. It doesn't even have to, like, we're in a different world now. It doesn't even have to be silver is more valuable and thus it's going up. It's measured in US dollars. If those US dollars are becoming less and less valuable, by default, its recognition in US dollars will go up. Does not mean the value has increased. Inherent value is just true. What you're looking at is a second order reflection of that. In dollars, we're saying, hey, this is the second order value of this asset based in US dollars that are becoming less valuable by the day. So like, what blows my mind is like, just let's peg this to inflation. So $12 in 2020. I would argue the cost of everything has tripled. Just general rule, I would say it's tripled. So I would say to all of you here, you're the one buying your groceries, doing all that. Would you say that that's fair, that it's almost tripled your cost of living, COVID to now, is almost 3 times as expensive day to day.
Yeah.
Because I know energy costs are about 50% minimum from that time period. They've gone up minimum 50%. So in most areas, it's more. But I'm saying the consumer goods, I think, have tripled. So from that standpoint, money has become worth about a third of what it stood at that time because we printed so fucking much of it. So with that logic, that puts us at 36 back in 2020. Or no, excuse me. Yeah, that would, if it's just following the devaluation of the currency, the debasement, if you will, this should have been at 36 reflected in today's dollars. If the same value was reflected, if the world had the same amount of value for this silver back then as they do right now. So let me ask you this. Do we have different things that we need silver for that just were invented? Did something change? Did we discover that we actually are not going to find much more silver ever again? What changed? Challenge yourself. What changed? I guarantee you very few can explain to me what has actually changed here, because odds are it's not much. Doesn't mean the trade didn't hit. I just want you to have fucking agency while you take it. Know it's fugazi. Take the trade anyway, knowing it's fugazi. That's power. That's power. Don't get suckered into the idea. Is silver more valuable now than it was then? Explain it. What do you think? Can you think of any reason silver has become more valuable? Like an actual something, oh my God, in order to do AI, we're going to need more silver, a ton of it. Did that occur? I don't think so. Maybe it did. I don't know. Did a new use case evolve since 2020 for silver? Okay, so there is a supply deficit, so that matters. Why is there a supply deficit? That doesn't seem to make much sense. So again, focusing on agency. Can you see the mirage? Nothing's changed. We're going to use a bunch more of it, but they knew that back then. That's my point. They knew back then what was going to be happening today. You didn't. So you probably bought this wave. Some didn't. I know some have been. If you're in the group and you're our lifetime member, like for instance, Davey here, he's been on top of this shit because he's a pro. Because we literally teach how to become a pro. So again, if you're a professional, just ignore me because I'm not speaking to you. You already know this. I'm talking to the newbie that's following this going, oh my God, it's up so much. I don't want to miss it. I missed Bitcoin. I missed gold. Shit. What do I do? You don't, you just, you acknowledge it. You then look, okay, so it looks like because of everything technology, there's going to be more demand. Great. Does this price reflect that demand already? Or is it not yet caught up? So let me ask any basic investor, you just started, doesn't matter. If you look at like right here, 21, and you look at what's happened just the last couple of weeks, explosive. Would you say that the market guessed that we'd need more silver and guessed correctly, and so the price skyrocketed? Would you say that that change in value has already been reflected? For anyone that's like, oh, I should buy silver now. Did you think about it that way? Okay, it's up 600% in the last couple of years. Does it have another 600% in there in the tank? Maybe, maybe not. But I like the idea of precious metals and commodities because they are a fixed supply, but this just seems, I don't know. I want to watch because if this continues, then it's going to continue. I would just love to see a touchdown 70 to buy off of continuation and buy a clean entry. Holy shit, we went way over. So that was fun. Yeah, I love y'all. I think is Bull live on, I think is he doing earnings, you said, or he was doing it prior to me?
Dude, earnings was 3 hours ago.
Okay. So I was very confused by that whole situation. Okay. Oh, wow, did Bitcoin just go shit? Okay. So I am personally, I'm just loading the boat. I'll buy it at 70. I'll buy more at 70. I own a shitload of Bitcoin from 7,000 to, I don't know, we're buying up to 50,000, I think, 60,000. I will buy more. That's when I'll do it. So I would love to see this break down more. And I'm going to have the truck ready to go to load it up. It would be a beautiful retracement. Come on down to 70K, give or take. That's when I will kind of do my final, I'm going to probably do final buys. Grab a full one maybe. I want to have at least, I'd love to have 10. I'm going to have to buy a bunch more. It'd be amazing to have 10 Bitcoin, $1 million in Bitcoin. That'd be good stuff. You know, a few years ago, someone was like, I wish I would have done it. I almost did. I just got a little scared that the bank would screw with me. I talked to this guy. He's like, yeah, I could do all your payments in Bitcoin because I loved that. Like, $22K. It's 2022. Wow. I just was scared to switch over because I thought the bank would kick us out if we started taking crypto. It just scared me. But I desperately wish we would have taken it.
What about
Think
now?
about that.
So there's people
even
like
taking 50 to 100K just to run the business in Bitcoin, right? That we say just had in the account. We just have it in the account to run the business. The business account would have went up 5 times while we were doing nothing. That would have been amazing. So you live and you learn. Yeah. So I'll be waiting for 70K. See what this dump is doing. This might be another interesting one to run up above $1.30 TELO. There's some fuckery there though. Damn it! This one came back down. Yeah, I'm gonna move some to cash here. This whole thing just does not look that appetizing to me. I think like a 30, 35 cash would be good right now. 35% cash would feel like this, like gut check. If you're like, hey, what do I do? That's what I would do. I would go 40% cash. It's my reaction. That's I know. Fuck, I don't have nearly enough cash. I am way too allocated. That's no good. No bueno.
Just sell a few of those options, man. That's it.
But yeah, I got to head off to bed. Pushing 22 hours at this point now.
Oh God, yeah.
But yeah. I'll get this.
All right, so look, if you're not in the Discord, the link's at the bottom. Get in there. That's where everything happens. And if not, we'll see you next week, Monday at 5 Eastern. That's when we typically have it, but market was closed. Yeah, I love that. Bang. So get on in there. I'd love to see you guys in there and talk more. We're in there talking every day in the chat. So I'd love to see you guys in there asking questions. That's the good shit. We're so good at research because you guys ask really good questions. It's pushed us to be a lot better at this. So I love the questions. Keep them coming. That is what you're paying to get those answers. from someone who knows them. So use it. All right. Love y'all. Stay blessed now. Ta-ta.